Hey everyone, welcome back to Corporate Decoder. Today we're diving into Pure Storage's annual report. Get ready because after this you might just be fluent in corporate jargon, or at least able to nod convincingly at your next tech conference. First off, a quick heads up. This report is full of forward-looking statements. Basically, Pure Storage is making educated guesses about the future, and we all know how accurate those can be. Pure Storage is a big player in data management and storage. Think of them as the folks who help companies keep all their digital stuff organized and accessible. They're trying to change the game by making data storage simpler and more reliable. Their plan rests on a few big trends: the move to faster all-flash storage, the rise of cloud-based applications, the increasing desire to rent storage as a service, and how important data storage is becoming for things like artificial intelligence. Their strategy is built on four main ideas. First, they want to make their all-flash storage technology the go-to for everything, even replacing traditional hard drives. They are really investing into expanding flash storage use cases, banking on their advantage with flash software, now with quad-level cell QLC flash. This includes the new HE family that simplifies file and block data for up to 4 petabytes of data, from content libraries to backup sets to active archives, and it's a big win for them. They've partnered with Meta to provide flash storage for their data centers. Meta's use of their software and integrated hardware technology is expected to free up significant amounts of power and space in its data centers and double the expected lifetime of their storage infrastructure. Second, Pure Storage wants to be a leader in hybrid cloud setups. That means helping companies use both their own data centers and cloud services seamlessly. A next generation of Pure Fusion aims to transform traditional data storage into a unified cloud experience. Third, they're betting big on subscription services. Think of it like Netflix, but for data storage. They have Evergreen Cat 1, which is their subscription service that makes your storage always up to date. That these include service level agreements, SLAs, and guarantees in the industry. Finally, they're diving headfirst into the AI world, developing storage solutions for the massive amounts of data needed for machine learning and AI applications. In March 2025, they expanded their portfolio with FlashBlade, K, the industry's most powerful storage platform. All of this is leading into their enterprise data cloud, a system they use to provide a cloud experience with one unified data management and storage solution. It includes highly differentiated all-flash technology, products, and subscription services that helps organizations reduce the complexity, increase reliability and cyber resiliency, and lower the costs of their data infrastructure. One thing that might worry investors is how unpredictable subscription sales can be. Sales from their Evergreen, Cat 1, and Cloud Block Store subscriptions are hard to forecast, and they admit this will impact their product and total revenue growth. Another tricky area is their gross margins, which are affected by everything from product cost to customer mix. Keeping those margins steady is going to be a challenge. They boast a customer base of over 13,500 at the end of fiscal year 2025. They say they are in approximately 62% of Fortune 500 companies. Impressive, but can they keep that momentum going? The company's public float, or the value of shares held by non-affiliates, was about $16.9 billion as of August 2024, showcasing the company's significant market presence. Of course, it's not all sunshine and roses. Like any company, Pure Storage faces risks. They explain it in the filing. These risk factors are important to keep in mind. They're worried about uncertain economic conditions, macroeconomic issues, geopolitical environment, and a slowdown in demand. All can affect Pure Storage's business, operating results, and cash flows. Sales cycles can be long and unpredictable, especially during economic downturns. This makes it hard to predict future sales and can lead to fluctuating results. They're also investing heavily in flash storage solutions for hyperscalers, but there's no guarantee these efforts will pay off. Design wins mean that the client found their products work for them. However, this does not guarantee actual sales. Cybersecurity is a constant concern. A security breach could seriously harm their business and reputation. Changes to trade agreements and tariffs could also negatively affect their business, especially since they rely on overseas manufacturers. Let's check some numbers in the company's books. First, the income statement. Their total revenue increased to $3.06 billion. That is a 12% increase year over year. That's solid, but not exactly lighting the world on fire. The revenue is attributed to both product and subscription services revenue. Their gross margin is 70% basically. For every dollar of revenue, 70 cents remain after deducting the cost of goods sold. That's pretty good. Research and development is 25% of total revenue. This shows they're still investing in innovation. Now the balance sheet, let's see what they are actually worth. Total assets, $396 billion, shows they have a large asset base. Total abilities, $2.65 billion, which shows a good amount of leverage, but hopefully manageable. Net cash provided by operating activities, $753 million. This shows they are making real money, meaning that it is cash that they can reuse for other activities. This is a good indication of the overall health of the company. Net cash used in financing activities, $509 million, a sign that they're spending money on things like buying back their own stock. Overall, it appears Pure Storage is doing pretty well. They've got a solid market position, they're growing, and they're generating cash. But they need to carefully manage costs and risks and continue innovating and defending their technology. It should be noted that there is some uncertainty with sales in the forecast, and the hyperscaler client could delay or drop off entirely. Company culture is a competitive advantage to them as well. The company mentions that managers differentiate rewards based on business impact and how employees model their values. I would consider this to be a very good sign. Pure Storage's internal controls over financial reporting were effective as of the end of fiscal 2025. Finally, it is interesting to note some important people in the company signed to be responsible for this document. Is Pure Storage a buy? Well, on paper, they look like a strong contender, but like with any investment, you have to weigh the risks and decide if you're comfortable with the potential for some turbulence along the way. Thanks for watching. If you enjoyed this deep dive, please like, comment, and subscribe for more Corporate Decoder videos. Until next time.